Hello, my name is Navi Batwal, and I'll be explaining to you how to complete the revised 2025 CWELCC Operating Budget version 2 for single-site operators. Please note this template is for planning and information purposes. For more information related to funding, eligibility, and reporting, please refer to your 2025 CWELCC guidelines or your accountant. The purpose of this template is to help you manage your revenue and expenses for the year effectively and to provide a projected repayable amount for year-end reconciliations to support centers in understanding year-end reconciliation requirements. This template has 6 tabs and only enter information into green highlighted cells. Moving on to tab 1, Info and Instructions. In the Identification section, please enter your center's legal name, operating name, if you're for-profit or nonprofit, and vendor ID. In the contact information, please provide a contact person's name, title, email, and phone number. On row 31, there is a link to the 2025 CWELCC guidelines. If I click on the link, it'll take you to Peel's Funding Support and Resources webpage. If you click on CWELCC programs and scroll down, you can access the 2025 CWELCC guidelines. This template makes reference to the guidelines, and it was included in the template for easy access. Going back to the template, on row 32, there's a link to this video. So if you want easy access to the video, you can click this link here. Below are descriptions of the tab in this template and provides information if they're mandatory to complete. Please take the time to read these descriptions. Moving on to tab 2, Operating Plan. The operating plan is required to calculate a percentage proration for total expenses for eligible children 0 to 6 and non-eligible children 6 to 12. This calculation is used in the Revenue and Expense Management section in tab 3. Row 8 has important information regarding eligible children turning 6 in 2025 and becoming ineligible. If further information is required, see 2025 CWELCC Guidelines Section 4.5. Starting on row 16, input the service level data for the site. Enter all applicable data in the table. Important note, only enter eligible 0 to 6 for CWELCC children on row 16 and ineligible children 6 to 12 on row 17. In this example, there are 75 eligible children and 10 ineligible children. Starting on row 26 provides the proration for 0 to 6 and 6 to 12. Moving on to tab 3, 2025 Operating Budget. The operating budget is divided into 2 sections, Allocation and Revenue and Expense Management. In the Allocation section, input the funding allocations calculated by the regional Peel into green cells only. The below information can be found in Gov Grants. Refer to your 2020 CWELCC cost-based funding grant and 2025 CWELCC allocation in lieu of profit grant to find the allocations. Program staffing, supervisor, accommodations, operating fixed and variable. The total of these is referred to as the benchmark allocation and are calculated by the regional Peel. Then we add legacy and growth top-up to arrive at the total program cost allocation. This is the total cost-based allocation you should budget towards, and this amount is used in the expense management calculation. These allocations can be found in your 2025 CWELCC cost-based funding grant in Gov Grants. Then we add amount in lieu of profit. The amount in lieu of profit can be found in your 2000 CWELCC allocation in lieu of profit surplus grant in Gov Grants. Side note, the allocation in lieu of profit amount is not included in the expense management section, which I will speak to more later on in the video. The total of these amounts is called your CWELCC allocation. Moving on to the revenue and expense management section. This section has been organized into different views. View 1 hides the monthly columns, and view 2 will show the monthly columns. If you're using our monthly budgeting, please use view 2, which expands the monthly budgeting section. Also, there is a minus sign up here that collapses the monthly section, or the plus sign, which will expand the monthly section. Please note, only enter info into green cells, and if you add a row anywhere, the cell references on the template or mentioned in the video may change. So starting on row 32 are the instructions for revenue. Please read these instructions. Row 38, centers can select if the expenses are actual or forecast to help keep track of what is actual and what is being projected. Row 39, 2025 CWELCC cost-based funding. Please ensure this amount matches your allocation in Gov grants for the cost-based funding announcement. Do not include your in lieu of profit in this slide. If the amount entered does not match your allocation from above, you'll receive an error message in column W. For example, if I scrolled over to December and change the payment of December, reduce it by $5, if I scroll over here, I will receive a variance message. A variance exists between allocation tab 3, cell D24. D24 is this amount, and the amounts entered on row 39. Please revise. So we will change it back, and you will see the message disappears. Row 40, CWELCC expected parental fees. Providers can use the revenue calculation tool on tab 5 to calculate their revenue. I'll speak to tab 5 later on in this video. Or centers can use their own accounting and bookkeeping records. If you use the revenue calculation tool on tab 5, your monthly revenue will be linked to this row. Otherwise, you can overwrite the formulas and input your actual and expected revenue. Important note, do not input the expected parental fees calculated by the regional appeal. Use the center's actual and projected revenue to accurately forecast repayable and revenue. Enter this amount as a positive number, unlike above where it was entered as a negative in the allocation section. Row 41, non-CWELCC revenue. If you collected any non-CWELCC revenue, enter the amount here. If serving only 0 to 6 group, input all non-based revenue in column S. So the non-CWELCC revenue row is divided into 2 columns, which is 0 to 6 non-based revenue and 6 to 12 revenue. If you have any questions regarding base and non-base revenue, please reach out to your EY specialist, or for more information related to base and non-base, see Section 4 from 2025 CWELCC guidelines. Row 42, less projected CWELCC repayable to appeal, no information is required. This negative amount is the projected repayable to the regional appeal at year-end under current guidelines from the province. We are deducting this amount in December to adjust the revenue to the appropriate amount of funding to help providers manage their revenue after the CWELCC recovery. Details of this amount can be found on tab 4, which I'll speak to in tab 4. So you can see the the recovery is occurring in December only and is being brought over into the total revenue column too. Columns E to P, you can enter in your monthly revenue. Column Q adds the monthly revenue. If not using monthly budgeting, you can overwrite this formula with your own totals. Column R is the base revenue for 0 to 6 years. Like mentioned earlier, column S is non-base revenue for 0 to 6 years. If collected non-base revenue for 0 to 6 year old, input the amount here. If the amount entered here is higher than the total column Q, you'll receive an error message to revise, and the amount in column T turns red. For example, if I change this to 250,000, this amount changes red because it goes negative, and you'll receive a variance message that says non-base 0 to 6 year revenue in column S is greater than non-CWELCC revenue in column P. Please revise. We will change it back. And you can see the red from the cell disappears, and also the error message disappears. Column T is a revenue for 6 to 12 and is calculated by subtracting the total non-CWELCC revenue from column Q by the non-base revenue. It is important that for 0 to 6 non-base revenue, that all the expenses associated with this column are reported only in the non-base expenses for 0 to 6 families section. And column Q is for provider comments. Now, moving to rows 48 to 50, the expense managements. A balanced budget will have $0 in this cell, like the example on the screen. And you can scroll across, and it says $0 remaining in CWELCC cost-based funding. The amount is the difference between your program cost allocation, which is up here, this 1.8 million, and column R, 0 to 6 base revenue and expenses. As you can see, the total expenses for this is the $1.8 million. That's why we have a $0 remaining in our budget, because our budget is balanced. Important note, in lieu of profit, surplus is not included in the expense management calculation and is meant for providers to keep as profit surplus. This is included in this section to help easily identify over and underspending in your CWELCC cost allocation. Moving on to tab 4, Repayable Calculator. Actually, we'll go back and we'll talk about the expense section. If you click on the expense table and you scroll down, you can see the top row freezes in the expense section, allowing to keep track of column headings. Once you scroll the heading past the table, the headings will disappear like so. Or you can click off the table and the headings disappear. Read the instructions starting on row 52, instructions for expenses. Now we'll move into the expense categories. The expense categories have a similar feel as the FAIR template. We have divided the expenses into 7 categories. It is very important If you enter non-base revenue for 0 to 6, the entire corresponding expense should be reported on non-base expenses for 0 to 6 families. More details on non-base expenses, you can see the 2025 CWELCC Guidelines, Appendix 3, Section B. If more expenses are required, use the other expense rows. If using the other expense rows, please align it to the appropriate category and update the description like we have done in row 65, other health benefits. If adding a row, ensure the formulas are being picked up in the new row, and also the cell reference mentioned in the video and template may change. Row 59 helps you keep track of actual and forecast expenses. So you can view the drop-down box and change it to actual or forecast to help better track your actual expenses and your projected expenses. Column A and B is a type of expense. Column C has the definition codes. You can look up the definitions codes in column C and refer to tab 4 to read the description. Column D, you can input your 2023 fare expenses or 2024 expenses and use as a comparison to 2025 costs. This is only for information purposes. No calculations are done with this column. If you collapse the column, you can see the previous year expenses and the total expenses for January line up. And just reviewing program related salaries, you can see they went up. Last year there were $1 million, and this year we're budgeting around $1.1 million. Columns E to P, you can enter in your monthly expenses. Column Q adds the monthly expense. If not using our monthly budgeting, you can overwrite the formulas in column Q with your own totals from your own accounting records. Column R is the prorated amount for 0 to 6 base expenses. The proration method is a hybrid approach where salary, occupancy costs, the centers can enter in their actual costs for 0 to 6 years eligible expenses. If the amount entered in column R is higher than column Q, an error message will pop up and column T will turn red. So if I change this to $30,000, you'll see this amount turns red and there's a variance message that says 0 to 6 base expense on column R is greater than total expense entered on column Q. So you can see the total expense was $28,750, but in column R we entered 30,000, making 6 to 12 expense in a negative amount. This is an error. So we'll change it back, and you can see the red in the cell T disappears and the error message disappears. So once again, salary costs and occupancy costs, the center can enter in their actual costs related to 0 to 6. For nutrition, program, general administration, and other, the prorated percentage from the operating plan is applied. We are using the operations category for those expenses. So for those expenses, we're using the breakdown for ages 0 to 6, which is the 96.9%. So once again, salary and occupancy, the provider can enter in their actual cost for 0 to 6. For nutrition, program, general administration, and other, we use the proration method from the operating plan. Column S, it is for non-base expenses for 0 to 6. No proration for the expense, as the entire expense is not eligible. Ensure non-base expenses for 0 to 6 are only inputted in this column. If inputted anywhere else, remove the expense and enter it in starting on row 111. For example, the center has an option for 0 to 6 families to enroll in martial arts training for the summer. The revenue from this will be entered on row 41. So if we go to row 41 is non-CWELCC revenue. So if we scroll into the monthly budgeting section, we can see the revenue increased in July and August compared to the rest of the months. And when we scroll over, you see the total for non-CWELCC revenue is $248,000, and the provider has calculated that $4,000 is related to non-base revenue for 0 to 6, and the remaining revenue is for 6 to 12. If we scroll down to the expenses section, we're going to enter the complete expense in the non-base expenses for 0 to 6 family section. So row 112 states instructor fee for martial arts program. If we scroll over, you can see 1,500 and 1,500 were reported as instructor fees for the martial arts class. And then column Q adds up the total, and then the total is transferred into column S. If you scroll up, you can see the $4,000 for non-base revenue for 0 to 6 is being subtracted by the 0 to 6 non-base expenses, the $3,000. Column T is calculated by subtracting the total expense by the 0 to 6 year base eligible expense. Once again, column U is for provider comments. Scrolling down to the revenue minus expenses section on row 120. As mentioned above, in lieu of profit, it is excluded from this calculation. The rows subtract total revenue from total expenses for each month and column. So looking at the formula and scroll up, you can see revenue from January, total revenue from January is being subtracted by total expenses for January, and we had a surplus in revenue of $35,000. Looking at the example on the screen, January to March revenue was greater than expenses. However, the remaining of the years, the expenses were greater than revenue. You can see from April to December, the amounts are negative, and if the amount is negative, the box will change from a blue color to a red color to help easily identify overspending. Your budget can look similar to this, as a higher percentage of the allocation was paid in the beginning of the year. Column Q subtracts total revenue from total expenses. You can see this agency is in a surplus of $23,361.66. Where is that surplus coming from? Well, column R has the 2025 base revenue minus base expenses, which we have a fully balanced budget, so there is no difference in that column. The surplus is coming from $1,000 from your non-base 0 to 6 revenue minus expenses and $22,361.66 from your 6 to 12 year revenue minus 6 to 12 expenses. Moving on to row 122, 2025 CWELCC allocation in lieu of profit surplus. The allocation entered above in the allocation section is taken and divided up evenly by 12 for January to December. This is the profit or surplus the center can receive for 0 to 6 base revenue and expenses. Remember to keep in mind any adjustments for underspending of expenses. And the adjustment, if there is adjustment, just say if you didn't fully spend your allocation, there would be adjustment to your in lieu of profit. And the adjustment occurs on row 42, which is here. Okay, we'll move on to tab 4, Repayable Calculator. Repayable Calculator is the projected repayable to peel. Projected repayable section is a detailed breakdown of what is included in your repayable line from row 42. From this row right here, row 42, CWELCC repayable to peel, the details can be found in tab 4. So the $43,065 repayable is a result of collecting too much revenue, and that if you collect more revenue than expected, that there would be a recovery in that revenue amount. There are 3 sections for the repayable. The repayable can consist of underspending of the program cost allocation, a recalculation of lieu of profit, and, like mentioned earlier, in this example, base fee revenue in excess of allocation. If you want further details on how these amounts are calculated, you can expand the repayable calculation for year-end reconciliation and follow the details here. This follows current ministry guidelines. And you can see the current repayable is $43,065, which matches this amount, and then is carried forward to this row 42, which will display the full repayable in December and carry it over to total revenue as a negative amount. Moving on to tab 5, definition codes. Tab 5 definition code is the definition codes for the expenses in tab 3. So these expenses here, you can refer to column C for the definition code and then reference it in column B here, and you can read the description to provide a little more detail on the expense. Tab 6, Revenue Calculation Tool. This tab will help you project your total revenue for the year. Please note this is not a mandatory tool, but we recommend using this tab to project your revenue. If not using this tab, please ensure in tab 3, row 40, the revenue reflects actual revenue collected from families. We'll switch back to tab 3, and we are referring to this amount here. These amounts are linked to the calculator, and if we're not using the calculator, we can input our monthly amounts here from our own accounting records. Only input data into green cells. Read the instructions on row 8. Row 13 has the monthly totals calculated from the below data. If the monthly totals are off, you can update the revenue for the month in this row. Column A, please type in the age group description. Column B, number of children enrolled. And column C, billing frequency. Column D, CWELCC fee per billing frequencies are repeated for each month Jan to December, and once entered in January will be pre-populated for each month to minimize repetitive entries. If required, you can also update each month individually. Column B is the number of children enrolled. Include all CWELCC enrolled children and children in receipt of fee subsidy from Peel Region. Column C, enter in billing frequencies from the drop-down menus. The drop-down menus have 4 selections: per day, per week, bi-weekly, and per month. Column D, enter in the parental fee. So for example, if I delete this data here, well, I can delete these 3 amounts here. And if you scroll across, all the amounts from the months disappear. We will add it back. Once we add it back, you can see the totals are being updated. If the calculation tool is not calculating exactly to the revenue collected, please update the amounts on row 13 to actual revenue received for that month. Also, row 13, column P, shows a projected repayable due to collecting more revenue than expected. To help better explain the recovery, the 2020 CWELCC funding formula calculates the total amount of funding a center needs to support the cost of providing childcare throughout the year. Because providers continue to collect a portion of fees from families, this amount is estimated and deducted from the total CWELCC amount we pay to providers. If a provider collects more than the estimated amount of parent fees, the actual amount is used at reconciliation to true up how much CWELCC funding they should have received from PO. In this example, they have received $43,065 more than they should have. Okay, moving on to examples, overspending and underspending of the program cost allocation. The example we've been working with has a balanced budget. We can confirm that by seeing $0 here and then visiting the repayable calculator. The program cost allocation underspending is 0 and there is no recalculation. So we consider this a balanced budget related to the program cost allocation. Now let's view what an underspent budget looks like. Go back to the operating tab. We can scroll down and just say in December, we were planning to have a project done by a contractor and we were budgeting $19,166. But the contractor, for unforeseen reasons, can't come in December and has to come next summer. So the amount that we budgeted for $19,166, we did not end up spending. So if I delete this amount, you can see there is adjustments occurring. So we deleted the $19,167 and we have underspending of $18,572.50. The reason this amount is lower is because of the proration applied. Also, your recovery increases to $62,427. That is a result of underspending of $18,573 for your program cost allocation, plus a recalculation in lieu of profit and surplus of $789. If we scroll back, you'll see there's a negative amount in the base 0 to 6 revenue minus expenses column of 789, and that is due to the adjustment in lieu of profit. And the 62,426 is appearing here. Now let's go through an example of what an overspent budget looks like. So just going back to our repairs and maintenance example, we'll add the amount back, the amount that we deleted, and just say the contractor was able to come, however, charge you additional $10,000. So we'll increase this by an additional 10,000, and we can see how the template reacts. You can see that up here, we added $10,000, but we're underspent by $9,690. The reason is because this amount is prorated between 0 to 6 and 6 to 12. We go to the recovery calculator, you'll notice that there is no change in recovery. The additional, since we were at a balanced budget and we added $10,000 more, that additional $10,000 is coming from the provider's cash flow. If we scroll down here, you can see base 2025 base 0 to 6 revenue minus expenses. You're in the negative of $9,690. And if we scroll over, you can see there's adjustment made to the 6 to 12 year revenue minus expenses. So if I change this amount back to the 19,000, you see there is no underspending. So this amount is true. And your revenue in minus expenses for 0 to 6 increases to $22,361. If I were to add it back, the $22,361.66 will change to $22,051.66. And then your revenue minus expenses for 0 to 6 shows a negative $9,690. So the $10,000 that we went over is divided between column R and column T. Now we'll move over to example 2, revenue, and collecting more revenue than we should or collecting less revenue. The example we've been working with, we have collected more revenue than expected, resulting in a recovery. If you use tab 6, revenue calculation tool, you'll see the revenue recovery on cell P13, which is here, and on tab 4, E15, which is here, and then gets carried all the way to December column, which is here, and then, sorry, here, and then the total revenue column here, appearing as negatives in this column. Now for an example where we collected revenue where the actual revenue collected is the same as our expected revenue. If we update our revenue amount to the expected base revenue offset calculated by the regional appeal, for timing purposes, we'll just update this total right here. So you can see both these totals are matching and the projected repayable to the regional appeal is 0. We'll go back to the repayable calculator and you can see there is no recovery to the regional appeal because there was no underspending in the program cost allocation. And if there's no underspending in program cost allocation, there is no recalculation of in lieu of profit. And since our base fees that we actually collected match what the region projected, there is no recovery in there. Then we can go to the operating budget and you see the amounts in row 42 say $00. Please note that to match our expected base fee revenue offset exactly may be difficult to achieve. Now moving on to an example where you collected less than the expected amount. Just say in this example, we collected only $380,000. So there's a difference between the 380,000 that we collected and the expected base fee calculated by the region of approximately $7,000. That difference of $7,000 will not show up anywhere in the in the template and will affect the provider's cash flow. See, there's no adjustment to the repayable calculator or no adjustment to row 42. This is the end of the walkthrough. If you have any further questions regarding the operating budget, please reach out to your early years specialist. Thank you for viewing the video.